Auckland is officially a $1 million home city, with the council's revaluation of properties showing the average values jumped 46% across the region. That's since the last council check 3 years ago. But it'll be Monday before Auckland ratepayers can check what their own home might have done. And our Auckland correspondent Todd Nile reports.
It's Auckland's real estate version of the Dance of the Seven Veils. Today the council unveiled the average change in values in 241 suburbs, but not individual properties. These show big suburb-by-suburb variations in the average rise, which take the average value to just short of $1.1 million. Well above average are suburbs on the northwestern fringe, Westgate up 86%, Whenuapai 74%. By contrast, more expensive central suburbs, such as St Mary's Bay, are lagging, up 32%, and Ponsonby 38%. Cheaper, especially southern suburbs, have risen more sharply, Manarewa East 62% and Papakura 65%. So what's going on? I asked the council's principal valuer, Peter Mackay, why rural Pairata in the south was up a staggering 151%.
Those big increases are primarily reflective of properties that we've classified as residential blockland where there's potential for subdivision, so they're not reflective of normal residential single-unit properties.
It's land that drives the movers, such as the northwest and other fringe areas where new large subdivisions are delivering high-priced homes. The Treasurer, John Bishop, says even the suburb-level figures mask variations of as much as 20%, and homeowners can't draw conclusions yet.
It's merely an allocation mechanism, so whether they increase by 10%, 100% or go down, it really depends on where you sit compared to the average on the impact that it'll have on your rate bill at the end of the day.
Among new factors this time around are the implementation of the city's new development blueprint, the Unitary Plan, which increases the housing density possible on some sections and therefore their value. But there's still a lot the council can't yet say, such as whether the spread of winners and losers in terms of what happens to their rates bills is the same as 3 years ago.
We haven't done that analysis, but again, given the way it works, you'd expect as many to go up as many to go down. I mean, we haven't compared it with 2014.
Back in 2014, I think there was something like 22% ended up with rates decreases. Does that proportion happen each time?
Look, I haven't got that data with me, to be fair. And again, the valuations just got signed off yesterday, so we haven't done that work.
From Monday, ratepayers in Auckland can go online and see whether their property's value has risen above average and might face an above-average rate rise next year. In 2014, public interest in individual valuations crashed the council's website. Even if homeowners can manage to ferret out their property's valuation, though, they still won't know what it means for them in dollar terms for nearly a year when the new rates are set. I tāmaki makoro mo te hōtaka o te ahiahi, ko Todd Nile tēnei.